Welcome to yet another edition of Financial Planning. This is episode number 4, and you're watching live with Mahesh Kathiravan, your debt freedom coach. This series I've started because I wanted to explain to you that how personal finance planning can be super easy, but just you need to take some steps. A very big disclaimer before going ahead with this video. You need to take your professional financial advisor's advice before taking any decisions related to this video, because this video is related, I am just sharing for education and informative purpose only. Okay, so because personal finance is personal even for one member in your family, so be it your brother, your sister, your wife, your husband, your father-in-law, mother-in-law, your parents, anyone in your family, everyone is different. So despite your blood relations, their personal finance is totally separate. Okay, so that is why I'm saying, please approach your financial advisor and then you take your decisions, because otherwise it will affect your money and it will affect your hard-earned money, right? So coming back to this topic, and this is very important thing. Why? Because I've seen many of people are watching the random YouTube videos and everything just for education purpose. They are telling, but still people are not keeping it in mind. So this is very important. Now, today's video is a very peculiar thing. This particular client is retiring in 3 years. Okay. Now, how do I did approached him and how did I did? Now, please note, uh, I'm not taken the client's real name and the details. I have masked all the things. I have removed the things which is relevant only I have shown with you. So that is why I said, don't just take this video as an personal advice and implement on that. Even if you see that you have a mutual fund portfolio, say what I am sharing with you, no, don't take it prima facie as the face of this my video. Okay, please surely take your advice, professional financial advice or certified financial planner, or qualified personal finance planner, and then you go ahead. Okay, a little about me. My name is Mahesh Kathiravan. I am a QPFP, qualified personal finance professional, and I am doing clients how to get out of the debt. Okay, now let's start it. So I will be sharing the file and how this works for the freshers or the new ones who are still not like you're watching the video for the first time. This is actually I'm taking in the Excel sheet. Okay, and what I'm doing is that I'm just first analyzing that what are the goals and everything, and then I'm coming back to the existing investment, and then I recommend what exactly we can do. So it depends upon whether he agrees or not. That is different thing that I'm not going to share because that's part of the non-disclosure agreement. Okay, here I'm just sharing the portfolio kind of thing, which is very common with all the individuals and investors. That is why I'm going to share with this. Okay. Now, the assumptions I'm taking, please note, this is the assumptions I'm taking for this. Now, this video, if you watch after 5 years, these assumptions will not hold strong for you. Okay. We never know what will the inflation rate tomorrow or day after tomorrow. We never know what is in, like after 5 years, I don't know what is the education inflation because I don't know. I'm not a god to predict the future, right? So this is what I'm currently taking. Education inflation as 10%. Equity fund returns I'm taking at 10%. Possibly measure of the things you will be taking at 12%, but I would like to keep it more minimum, more restrict so that it can be value added and it will be very, very point to point you will able to see the returns. Debt funds again is 8 to 9%, but I am taking only 7%. And for other goals, it's 7%. Okay. Now, what exactly this Ram has this particular investments? Now, like I said, he's going to retire in 3 years. That's what he told to me when we discussed our the financial goals and everything. Now, what he was saying is that his first son's marriage is for present is around 25 lakhs, and he's getting the future cost about making at 26 lakhs it might be. So this is what he's looking at these things. Now he's having a very good portfolio of mutual funds and uh, like direct stock investments, PF and everything. But there's a lot of problem in that. What problem is that I will tell you first. Let's first analyze that what are existing investments he is having. Okay, and then I will go for the recommended. So first I will hide this so that correct. So So, Aditya Birla self frontline equity is 3,69,617. Existing SIP is 2005. Kotak Plus Cap 375,064. Okay. He's continuing that SIP of 2,500. Franklin India Primer he has stopped 2,94,780, which is why very good amount. But yes, I will be sharing about this particular mutual fund. Mid asset, large and mid cap is very good. 4,24,000 and 5,000 SIPs there. Canada Robeco, small cap, yes, he has stopped due to some other reasons because I think he was not finding very return wise is not very good. Small cap also, and it's already risky also. So it's very good. It's a good decision he has taken before he approached me. That's what I want to say. SBI Flexi Cap also has 4 lakh 1,774 5,000 is the existing SIP. Axis Nifty 100 index is 3 lakh 89,743. Axis Small Cap to 29,001 2,000. Kotak Nasdaq 100 FOF 14,982. Parak Flexi Cap is very good one, 3,62,461 2,000 rupees is the SIP. But please note, the mutual funds which I am sharing is all about that particular this kind of RAM. Okay, now this might vary depending upon because the time you're watching this video might be the return of this funds. And that's why I put a disclaimer in the first of the video only that you take your professional financial advice and then you go for it because this is just to see how you can do on your own personal financing planning because this requires just 15-20 minutes. If you see my videos are 15-20 minutes only. So this is very easy to do it but a lot of complications are going on. Why? Because you when you have a lot of uh, products in your hand, it takes a lot of time to analyze, and that's what is happening in this. Okay, so I made it very easy for you uh, to make it look simple. Okay, great. So Nippon India small cap is 9,56,762. 5,000 is thing. Motilal Oswal Nasdaq is 1,73,148. 5,000. Now we have the cond this thing. Now, if you see Con Commodities, Con Infrastructure, Con PSU, Con Small Cap. Now, this I will be coming back. He has a lot of exposure on the company particular count. Now, why this is not a recommended option, I will tell you. Yes, this is good. Tax saver, yes, but now it doesn't hold difference after that new tax regime which will be coming. So we don't know what is the status. We need to see next month's budget. So let's analyze that. Yes, direct stock I will be strongly advocating him. Sorry, not to go for that because since it's 3 years only then PF and superannuation fund is there. That's good. NPS is there. I will probably continue. And these two funds I have done. Now, remember one thing. If you look at the previous videos also for the retirement, I was suggesting arbitrage fund. Now, arbitrage fund is a very good in terms of retirement. But when it is needed only when you are approaching your retirement age. So if say for example, if you are in 45 and if you're retiring at 60, that means around 15 years or years are there approximately. So in that time is very good time to start investing arbitrage fund, but with a high SIP amount. Not 1,000, you will not get anything. Okay, but a high SIP amount of minimum of 10,000 so that it can get. But depending upon your financial goals and everything, you need to decide. Otherwise, it's good to go. It's nothing like that. But for these clients, if you see major of the clients which I have taken, they all were approaching the retirement, but they were more exposed on the equity rather than less on debt, or they were using more exposed on the commodities rather on the good arbitrage mutual funds. That is why I suggested. Great. Now I will go to the recommended. Now, if you see here, just percentage of investments, just hide it. Great. Now, this fund, arbitrage have given mediocre returns in return months. Okay. Now, I would suggest that this is very good for me in recent months. Aditya Birla Frontline Equity has done a very good fund. Actually, this is not the right thing. Sorry. Continue with this fund. This is very good. And also hike it by 5% every year. So, which means that this is very good fund to go about it. Now, this fund has given, yeah, this fund's having this thing. We have to close it and shift to a corporate debt fund so that it will be very good. Okay. Yeah, Prima, like I said, Franklin India Prima Fund mid cap has underperformance, so you need to shift the corpus to short term. Okay. Here also large and mid cap. Yes, you have to stop the SIP and shift the corpus to a debt fund. Small cap can be well volatile in short term. Shift the corpus to debt. Now, if you see these all things while I am sharing to you, why I'm giving him the advice of going for debt fund. If you remember what I said, 3 years in retirement, And the funds which is holding, it's all of equity side and volatile kind of nature. So this 3 years you need to protect his capital. That's more important rather than looking at the returns, because this is not the age where we need to take the risk and take the returns, right? What if the returns will not be there? We can't predict the market, right? Okay, and we can't uh, select a mutual fund based on the past return. It's just for your analysis and research. That's right, right? Hope you are agreeing, and your uh, what I would say, you would agree on this point that mutual funds are subject to market risk. Yes, so that is why I'm trying to get it more congested and make it more simpler for that particular person, so that it can be very easy for them to understand. Now, if you see flexi cap, fund has slipped. Now, this is I'm talking about today. So possibly I don't know what has happened, because this analysis I've done for past 1 week or so. So it might be have shifted also. Okay, but for this, because like I said, this is not the live analysis I'm doing. I'm doing a lot of like 1 or 2 months, might be 1 or week, 2 weeks maybe there. This is very good. Nifty is a passive index fund, so very good for the retirement people, because not that much volatile returns changes will be there in the fund, and it's very good to go in. And gold is also, the goal is very near, so you can stop the SIP and go in for this thing. Yes, this is very good. Small cap, you can take a little bit of risk, because we already stopped the another mid cap and small cap, so you can go for that. Here, yes, Nasdaq also you can go, but this is very good again, because US stocks is very good. When like a 20th of January, I think Donald Trump is going to take power. So might be there a lot of changes will be happening. So possibly in US focused stocks might get a lot of changes there. So let's see and observe what happens in there. Paraparik FlexiCap, amazing fund. Nippon India small cap, yes, that's all these things. Motilal is also a good thing. Both these funds, mid cap, SDFC and PGIM, is a both have done very good. But the gold is near, the goal is near, so you have to stop the SIP and again next year gradually shift to the debt fund. Now, like I said, for the quant, I have already told him the retirement day is gone. So these funds have performed very well, but now it is high time to dilute all the things, because there's a lot of exposure on the quant company about that. Okay, and a lot of mixtures are there. Now, if you go deeper into that, you will obviously see, but they are very thematic funds. If you see quant commodities, quant infrastructures, quant public sector units, quant small cap, now this might be, see, if you see, it's all been thematic funds. Direct investments is risky. Yes, I told, review the portfolio and consider this thing. Provident fund, yes, keep going. And ICCI Provident Fund, told them to start an SIP of 16,000 and our arbitrage fund of 12,000, so that it can make him more secure for his retirement. Okay, so this is how I developed a beautiful plan for him. And if you would like to have a consultation with me for debt freedom, like how you're getting out of the debt, like if you are in home loans or if in car EMIs, and if you don't want to how to get out of the debt, let me know. I put a discovery call session or form. Just fill in this form and I will get back to you, and we will discuss about how you to move ahead on this particular journey. Okay, hope you like this video. Just comment like what you felt about these things, and how you felt, how you feel, like do you want anything more in this particular series? Let me know. I will surely add it in the particular series as well. This is fourth part. So see you the next part. Tata, bye bye. Thank you so much.